Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Corporate coffers are swelling with digital assets as Strategy now holds 3% of circulating Bitcoin, and SharpLink Gaming overtakes the Ethereum Foundation to lead corporate ETH treasuries. ETF flows have reshaped US trading volumes, while regulators from the EU to Washington weigh in on crypto policy. Strategy, formerly MicroStrategy, disclosed that it owns roughly 600,000 Bitcoin, or 3% of supply, sitting on about $30 billion of unrealized gains after buying at an average cost of $71,268 per coin. Peter Thiel's Founders Fund took a 9.1% stake in BitMine Immersion Technologies via a 5 million share purchase, aligning with BitMine's push to build an Ethereum reserve. SharpLink Gaming has assembled nearly 300,000 Ethereum valued at $884 million, following a $225 million acquisition, and now leads corporate ETH holders. Miners and firms such as Bit Digital have shifted mining profits into Ethereum treasuries, reflecting a wider trend in public companies stacking digital assets. In the United States, Bitcoin ETFs now match or exceed spot exchange volumes, with nearly $20 billion in inflows since April and a record $2.2 billion over 2 days, before flows slowed to $297 million. Major asset managers like BlackRock drove over $1 billion in daily Bitcoin ETF inflows, while ProShares launched leveraged Solana and XRP ETFs designed to deliver twice the daily returns of those tokens. These developments underscore the growing appetite among institutional investors for regulated crypto products. Ethereum climbed to 5-month highs near $3,155 after companies stockpiled tens of thousands of ETH, while Bitcoin eased back to around $117,000 amid profit-taking and Federal Reserve succession talks. XRP broke above $2.90 resistance following regulatory clarity in the Ripple case and rising ETF speculation, reclaiming its spot as the third largest crypto by market cap. Policy moves intensified as President Trump intervened to revive a procedural vote on the Genius Act and related stablecoin legislation after a House vote failed. A small caucus of conservative Republicans had stalled the bills until Trump secured their support. Meanwhile, the Clarity Act drew warnings from DeFi leaders who say its provisions could cripple decentralized exchanges. In Europe, the EU sanctioned the A7 network and pro-Kremlin influencer for using a ruble-backed stablecoin to spread disinformation and evade sanctions. Standard Chartered became the first global systemically important bank to offer institutional spot trading of Bitcoin and Ethereum through its foreign exchange systems, while JP Morgan advances stablecoin development despite its CEO's doubts about their utility. In Australia, Block Earner launched a Bitcoin-backed home loan product, allowing crypto holders to use Bitcoin as collateral for property deposits. Polymarket was cleared as the DOJ and CFTC dropped investigations, ending months of scrutiny over its prediction market. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready. This podcast is automated by artificial intelligence and is for information purposes only. Nothing stated constitutes legal, tax, investment, or financial advice.